Welcome everybody to Markonomics 101 presents Hoot Loot February 27th showing. What you just saw moments ago was how our last show ended, care of Mr. Elon Musk of Tesla. He's still sore about some of the comments I've made about his purchase of Bitcoin and a few other things that I've brought to his attention and to all of your attentions. But he swears he's going to do something even worse this time. We'll see. I'm sitting on the deck of the Enterprise back here because we want to pay our tribute to the passing of Leonard Nimoy, Mr. Spock, who would have been one of the great traders. Why? Because he had no emotions. Vulcans had no emotions, and the last thing you need are emotions in successful trading, and everybody has emotions, and that's why we don't successfully trade as much as we could. And so he was sort of an inspiration for that, and that's why he's here. So today's show is called I See the Bad Moon Horizon, which is also a tribute to one of my favorite groups, Creedence Clearwater. Way back when, for all you old folks like me, who've been around since the dawn of mankind, basically. But in any event, we have a promo going on, $200 Visa gift card to one of our subscribers. The drawing will be as of tomorrow, the 28th. And so if you would, the show is all about being informed, being amused, never being misled. If you would, could you please like and subscribe? We love y'all. And we're going to come back with the charts and some of our commentary in just a second. Welcome back. We're going to go to the charts, and I hate to say this, but there's an awful lot of red in these charts, and really what we're seeing is a very dramatic moment in the financial history of the United States, and you are here to join me in this journey, and this is going to be the truth as it really is. And we start with the Dow Jones Industrial Average. Look at it. It's broken down just a little bit from an ascending wedge, which it was expected to break down. It has. It did as of Friday's trading. This is not a good sign, and you're going to see a whole lot of bad signs, bad moon horizon. That's why I picked that title. So here we go. The NASDAQ, even worse. On Wednesday, it started to look kind of bad already then. And because it was the leader on the way up, it's going to be a leader on the way down. And this thing has already broken its trend line. And I would say that it's got, I drew the support levels in. This is going to bounce off of one of those. And I don't know how long it's going to bounce. Monday, who knows what's going to happen on Monday? It's not like I have a crystal ball or anything. Seriously, Monday, I guess I do, but it doesn't really help me very much, does it? It just tells me nothing. Anyway, the 8-ball's a little bit better. The 8-ball's actually a little bit better. You're dumb and you're ugly. Okay, at least it has something to say. All right, so let's go on to the NASDAQ, or let's go past the NASDAQ to the S&P 500. It's also breaking down. Look at that. An ascending wedge is really a bad pattern. And when you see a lot of them, we're going to see reverse waves and ascending wedges the whole damn way through this thing. And you're going to see pretty much red everywhere, although there's a couple places that can help you, and we're going to point those out too. All right, so let's go to the small cap index. Also, just broke down ever so slightly from an ascending trend channel. But again, it's a breakdown. Small caps have broken down. That means a lot of the speculative interest is finally dried up. And now you don't have any buyers left. This is what I'm mentioning, is that when people get too lopsided, they're too enthusiastic, and they're all in, there's no one left to buy, and you have a liquidity crisis, and you have a trap where everything goes down at the same time, because the people who are leveraged or margined need to sell things they can actually sell to bring their account back into balance, or they get sold out. So, this starts becoming a domino, and it looks like it's beginning to take place. So, we're going to go on to the transportation average, and here you're seeing two reverse waves. Okay, now I know this is a complicated type of pattern, but it's showing up in a lot of charts, and it's pretty reliable. There are a couple of patterns that are really reliable, one being a rounded top or a rounded bottom, and the other being the reverse wave. These are very reliable in that they give you greater than a 50% chance of being right. And that's what you want. You want to have a 60%, 70% chance if you can, which is pretty hard to do because there's so much randomness and things just happen. So, trying to get to a high likelihood of success trade is not easy. You have to spot these really hard to read patterns. In any event, transportations are very important because they move all the goods around, and basically, if people aren't buying anything, people aren't transporting anything, then it's called a recession or depression when that happens. So it's an important thing to keep an eye on. Crude oil. Okay, now we've been having a problem. We've been talking about this for a while, but there's an inflation problem, and there's an interest rate problem, and there is a Federal Reserve problem, and there is look at crude. It's over $60 a barrel. I mean it's just going straight up. So this is something right here that is alarming. But the good news is, and gasoline too. Okay, so paying more at the pump. And there's copper, building materials, those are going up. Okay, so what we're seeing is basic type stuff that is everywhere, escalating in price really quickly, and that is the essence of the problem. This is the CRB index of commodities, the Commodity Research Bureau. Oh, what's that? Oh, I hear my phone ringing. Jeez. Oh, hey. Oh, Jay, how are you doing? Well, yeah, I'm glad you called because actually, I'm going to have to cancel lunch next week. Or postpone it a little bit. Well, I know you're flying out here for it, but I could only get one appointment for Ace's grooming. So that was it. So anyway, let me call you back. I'm doing the show. I know you and Janet don't know what the hell to do. Just watch the show and subscribe, and you'll know what to do. Okay? I'll talk to you later. All right, bye. All right, that was Jay Powell. He's panicking, and I don't blame him. With what's going on. So here's the U.S. dollar index. Okay, now look at this thing. It's starting to actually act very well. And it's made kind of a rounded bottom here, and this is part of explaining everything. Is the dollar going up is partly caused by the fact that it's going up because people are buying more dollar denominated bonds, which are also going up in yields. All of a sudden, 2%, 2.5%. It's not looking too bad when your own country is giving you like the UK, 0.5, or Germany minus 0.5, or Japan, basically zero. So all of a sudden, 2.5 looks pretty good by comparison. So this is the Bitcoin, the Grayscale Bitcoin Trust that the Winklevoss brothers began, and I think this thing may or may not have broken down. I mean, you look at this thing, and again, I want to emphasize why I put some of these annotations on here. All bulls and no bears. That means that's not a good thing. A week ago, honestly, you couldn't find anybody that was bearish on Bitcoin. Now you can find a few, and all of a sudden, those people that thought they were being geniuses by buying it and putting it in their treasury stock and all that stuff, that's not going to look too good, I think, in a little while, unfortunately. And I'm talking to you, Elon, among others. Okay, so yields on 10-year treasuries, look at that. This thing is escalating like crazy, with the exception of Friday. They kind of came in. But look at that. It's Ace. Yes, I know. They are looking at Ace. Hey, would you? Okay, go ahead and deal with that. All right, so anyway, yields on 10-year treasuries are escalating at an amazing rate. The Fed cannot stop this. That's why Jay called me in such a panic, and he wants to have lunch so badly, is because he doesn't know what the hell to do. Well, markets function the way markets function, and that's all there is to it. You cannot move a market permanently, and no matter how many times I've told that to Reddit people, no matter how many times I told Jay Powell that, Janet Yellen that, they still want to manipulate the market. It doesn't work. It makes you broke. I've never actually tried that. All right, so these are the 7-year. Now I want to say make a point here with this particular chart. This is a new one. I've never actually used this one before, but I mentioned the fact that how much impact a slight move in interest rates has on the principal of bonds. These are 7 to 10-year treasuries. Okay, so when they go down in price because interest rates go up, okay? Now look at this thing. For a 1% rise in interest rates, this has gone down 8%. So in addition to your 0.5% that you were getting in coupon, you lost 8% in capital, so you're down 7.5% in 6 months. What a safe investment you're offering as a Treasury of the United States, okay? This is a 30-year bond. Now, if you really want to see some impact, now, again, I want to mention that the longer the bond is, it's called duration. Duration is the sensitivity of a bond's price to the length of its maturity. So 30-year bond has more sensitivity than, say, a 10-year bond. And I'm going to show you exactly on this chart exactly what that is. This is an inverse ETF of 20 plus year treasuries. And you look at that, you would have lost 20% on your money in the last 6 months. Plus, you would have gotten your 1% in interest, so you'd be feeling better about that. But the good news is you got your 1%. The bad news is you lost 20. So that's partly why they're in a panic and why bondholders are in a panic, because again, we're just getting going here. Now, there might be a retracement, but we're just getting going. And when Europe and Japan and all those other countries that are still negative, oh my God, can you imagine what they're going to go through? I've been saying this for a long time, and it's coming to fruition. So please stay with me as we go on this journey, because it's going to be really, really neat, okay? ProShares, this is the ProShares Ultra Short 20 plus years. Okay, now, if you want something that goes up when interest rates go up, here you go. Here's an ETF you can buy, and you can hedge yourself against interest rates. So that's something that I look at as giving you another tool to help yourself, because pretty soon you're not going to be able to make the kind of choices that you are today. That's what I'm trying to tell you. There are going to be fewer choices, or fewer good ones, because things are going to start moving in a hurry here. Stuff's happening. All right. Now, Apple, I mentioned a couple weeks, either the last show or the show before that, it was starting to look weak. I think it was last Saturday's show. And I said, Apple being the leading stock, when it starts to break down, that's not a good sign. And it turns out it wasn't. Apple has broken down further. And again, I want to reiterate, this is something that I've said in the last few shows, that one of the reasons we know we are in a mania, we are in a bubble, is the fact that Apple was worth roughly 2.4 trillion at its peak, and that was more than the GDP of all but 7 countries. So when that kind of thing goes on, the world has gone insane. All right, Amazon has now broken down. It's a major retailer. That's not good. All right, Facebook, it's red, but it hasn't quite yet broken down, but it is in danger. It will follow if these other ones continue to go down. I mean, something has to crack first. All right, so Google actually looks pretty good, although, interesting thing is I drew a little box here in red, because if the market should gap down on Monday morning, and I won't say that it won't, I won't say that it will, but it could. It's a possibility. If it should gap down because people start panicking over the weekend or something like that happens, I don't know. You could have an island, and that's, these islands are not, they're not like Tahiti. They're more like Alcatraz. You're trapped in them. You're not there to enjoy. You don't enjoy yourself. You are underwater when you're in an island and it gaps down. Okay, Microsoft, still holding up pretty well. But I did mention that, it's kind of curling over. It's starting to look like it might break down. But for now, it's holding up pretty relatively well. NVIDIA is starting to break down too, and that's another pocket of remaining strength was the semiconductors. Not enough chips around. You can only eat just one. NVIDIA is one that it's one of the high flyer chip companies, and it looks like it's about to break down too. So Qualcomm has a chip maker, 5G. It's broken down. So what I'm showing you here is that more companies are starting to crack, and that in the coming days, it's kind of like a domino thing. More and more crack. So, here we go. Tesla. I didn't put much on here. No annotations. I do want to mention a couple things, though. One, it made a rounded top. That's not good. And it broke down from the rounded top. It was, massively overvalued. The other thing I want to mention is it has high short interest, now back again in it. And you want to be careful about shorting something with high short interest, because you saw it happen with GameStop before, and I think it was Cos and some of those other companies. It's always really, really risky to do that. Okay, always risky. And even though I think this company is overvalued, I would never say, hey, go ahead and short it or anything like that. It's just trades too crazy. So what can I say other than avoid? Okay, so this is some of the indexes. Banks are among the remaining leaders in the marketplace. So, JP Morgan actually made a new high last Thursday or Friday. Warren Buffett's a seller at JP Morgan. Way to go, Warren. You timed that perfectly, actually. Big Pharma is starting to break down. Notice the reverse wave in this one. Again, this is a 5-point reverse wave, like a megaphone, higher highs and lower lows in succession. That is a sign that of uncertainty, or a sign that there is more variability. in the particular sector, companies, whatever. Big pharma, I think, has broken down, as has most of the healthcare related issues we're going to show you in a minute. Airline Index continues to be the funniest thing I've ever seen in my life. How is it that you can be practically at new highs and no one is flying your planes? I mean, seriously, this one I really don't get. I think it's hilarious. So I put, are they taking off or are they having a crash landing? But when you're American Airlines and you're bleeding 100 billion a month and your planes are sitting in parking lots, basically not being used, I don't know how your stock goes up so much. Anyway, broker dealer index. This one is a picture perfect parabola. Although, this one ought to start breaking down, because one thing you can't do is IPOs in the kind of market I think we're looking at seeing. And so we might not see that SpaceX IPO that I've been so excited about. Big oil, it did break above 950. It looked bullish. And, one of the things that I want to mention again is that at $60 a barrel, shale oil becomes competitive. And so if this is, sort of imputing 60, then I don't see the price of oil going up a whole hell of a lot once these shale oil companies start to really come online and stream. We'll see what happens, but it's already happening. Home builders are actually going up, and part of the reason they're going up, believe it or not, is inflation. Lumber is apparently in very short supply, so much so that the lumber, there's a trade group for the lumber industry. They're actually lobbying Joe Biden to place some kind of restrictions on price. And we know that works every time it's been tried. Price controls are a phenomenally effective weapon. Oh my God, please don't do that, Joe. Please don't do that. Okay. But anyway, home builders also, because of copper, and I showed you the chart of copper earlier, copper and lumber are going up, and that's the reason you're seeing this, go up. And pretty soon, I don't know who's going to be able to afford a home, especially with interest rates going up. It's really going to be very hard. Healthcare sector, 1/6 of the economy. You absolutely need to include this. This one's breaking down, also out of an ascending wedge. Red ascending wedges are all over the place, and it is a really bad sign. This is retail. It's broken down too. I'm going to show you some of the individual retail companies. They look like crap. Amazon and some others that I've showed you. Gold. Okay, I got to admit, I have pounded the table for gold for months, and I've even said last week it's hanging on by a thread. It's no longer hanging on by a thread. I'm going to say this flat out. The fact that gold has broken down like this, it's a really bad sign. It means that there is no liquidity in the market and that people are selling things that are more liquid because they're having margin calls. This is a really bad sign. So all the miners that I've liked, they look like crap too, because again, the stronger the stock, the easier it is to sell and get the price you want and meet your margin call. Silver, even though it hasn't technically broken down on this chart, I read today that there's some stupid attempt, to deal with this short squeeze. Oh, help yourself, guys. Give money away. Please. If you want to give money away, please. I am more than happy to receive it. I know lots of people that are happy to receive it, but you can't move a market, and you're not going to be able to move silver at all. Alcoa, a 5-point reverse wave, a big aluminum manufacturer. Metals. The fact is that this thing is breaking down, and all the metals are starting to break down. And if metals are breaking down in an inflationary economy, and we're seeing that, the CPI, the Consumer Price Index, came in at its highest level in like 5 years. I forgot to mention that earlier, but I want to mention it now. The Consumer Price Index came in at like the highest level in several years. Okay, so we're seeing it even in government statistics, which we know are deadly accurate, spot on all the time. Mr. Spock would be so proud because he's so logical. Rest in peace, Mr. Spock. Okay, Alcoa, Bank of America, and this, look at this thing. This thing, Bank of America has gone parabolic. Okay, that's what I mean by this is kind of the terminal phase. The terminal phase is when all the junk floats to the surface. The turds float to the surface, and like this, for example. Okay, Berkshire Hathaway, great company, but this is and this is actually hanging in there. But look at the volume. Part of the reason I believe that we're seeing the turnover, and I haven't mentioned this in the past, some of the charts, but look at the volume. on these charts. That tells you something on a lot of these, because they've broken their trend lines on high volume, on a really high spike in volume. That starts telling you there's an awful lot of sellers out there waiting to get the hell out, to take their money off the table before the table takes the money off of them, as we say. All right, Costco, look at that. I haven't even changed this chart. That rounded top has been in there the entire time, and I pointed it out for weeks and weeks and weeks and weeks that this was a bad pattern. It is. It is a bad pattern, and look, it's finally broken down, and Costco is one of the biggest retailers there is. It's a Dow 30 component. CVS Health, I guess we don't have enough injections to go around now or something, because this one's now breaking down. Oh darn, did we like solve COVID? Or do I have to fire phasers on Dr. Fauci, which is something I've been dying to do. My therapist thinks that firing phasers, like back here, saying, Mr. Spock, fire all phasers at Fauci, would be really good for my mental health. But as we know, my mental health has been deteriorating for a long, long time, thanks to cable news. Okay. Chevron, Warren Buffett bought this, and he looks like he did pretty well, except for the fact, shale oil. Okay, I think maybe he doesn't believe in it, but he added Chevron, and oil has done well up until very recently. FedEx Corp, again, I've talked about this thing as being a rounded top. This pretty much has been the story. And again, that's bad news when you have a major transporter of goods turning and looking bearish. Okay, Home Depot, big retailer of stuff, nice home stuff, and that's broken down. And that's a Dow 30 component. This is Johnson, Johnson & Johnson. It used to be called Johnson & Johnson, or at least a lot of people think it's Johnson & Johnson, but actually it's J&J. So that's because John Johnson joined the firm and it became Johnson, Johnson & Johnson. But regardless of how many Johnsons it's called, it doesn't look good. And it's a major consumer goods company, which is why I included it. And it doesn't look good. It's kind of curling over. And again, these are the kind of companies, these are where people spend money. JP Morgan, look at that. Parabola broke down, possibly a possible break of a parabolic line. That's not good. It means Warren Buffett was right, but it's not good when your biggest bank is starting to curl over. Nordstrom's, another retailer that looked like it was going to do okay, and it's in a rounded top. You know what happens in a rounded top, because it almost always happens in a rounded top. Sometimes we do see some exceptions. We point them out, and I'm going to show. Chevron was one. For example, a couple charts back that had a rounded top where it actually broke positively instead of negatively. And part of it is the art. It's never 100% correct. So you do see examples. Pioneer is the largest shale oil producer, and look at that. Okay, it's back to life. And a couple of them actually went bankrupt. Chesapeake, I think, went bankrupt. This one, though, remains fiscally solid or financially solid. And I'll tell you this, they're pretty damn happy to sell shale oil at the 63 or 5 or whatever the barrel price is these days that I just showed you. Procter & Gamble, another Dow component, big consumer product company. They sell just about everything, including baby diapers and the pens I depend on. I shouldn't have even admitted that. But it broke down from a rounded top too. And again, that pattern tells you that momentum on the upside is slowing down and a company is decelerating. And so as it rounds, it does it like that, like a parabola, and like as if you threw a baseball and it would go whew. So you got to watch out for them. And that's literally what's happening here. And the chart is giving you a guide that it's happening here. One of the reasons you want to follow charts is that you get that guide. You get a pictorial guide. And I'm here to guide you through the guide. So where's my TV guide? Speaking of which. Okay. Target. And here's another one that just broken down. A retailer, major retailer breaking down, not good. Okay? UPS, they deliver in a rounded top. You know what's going to happen next, right? Pretty obvious. Walmart shoppers are tapped out. Look at that. Breaking down. Not good news. Gold and silver miners, these were hanging in there, okay? They were hanging in there, and look at that. They've broken down. Why? Because they're more liquid. They were up higher. They had more people that were able to raise liquidity. All right, and I'm just going to show you a couple of Barrick Gold. Looks like hell. It's the largest producer. Kinross I've talked about a bunch of times, and it looks like hell. So you look at these things and they look like crap. They look terrible. This is a silver mining company. Look at that. SSRM Silver is one of the premier silver mining companies. God, it looks like It just looks bad. And wheat and precious metals, look at that. It also broke down. It looks bad. What I'm trying to say is that people are selling stuff like this during a time when these should be going up because of inflation. It means they're tapped out and there's a crisis coming. I'm sorry to say this, but some crisis is likely coming, and this is a hint that it's coming. All right? And as a matter of fact, I wish I was where I was last week instead of where I am this week. I could be, inhaling and, kind of calming down a little bit. But even the marijuana sector, and that's why I'm saying it broke down too, for a reason. People could sell them and get out, and they could get a decent price for them. Okay, so this one sold, but I do think they're in long run bull markets, like I do precious metals, and they will ultimately prove to be a fantastic buying opportunity. You just have to wait. Fantastic buying opportunity, but wait, okay? Just wait. So Canopy, I think it looks good from a long-term standpoint. Here's Kronos. Kronos is one that I recommended, stopped out of it. It looks good from a 5-year standpoint too. Again, I think it's in a long-run bull market, but you'll have a better chance to get in than you do right now. And people are selling it because they got it. Hexo, another one, another cannabis sector stock. Again, every one of these has had a breakout and a shakeout, is what I call it. Breakout and shakeout. They basically exploded, and then all of a sudden they're back to where they exploded from. So you might get another shot at entering the elevator and going up again. I don't know. We'll see. Again, like I said earlier, I don't have a crystal ball, so we just have to let things play out. Okay. Tilray is my favorite one. Again, another breakout and shakeout. I want to show you this because, again, this is going to make a great opportunity at some point, but it isn't now. And this is another reason why I think so. Again, look at the volume here. When it broke out from that little trend channel, yeah, it might return to the trend channel, and you might be able to get in all over again. But this thing, I do believe it has very good economics, and I do think in today's environment that the usage is going to go up per capita. In other words, the legalization is one component of it, the uses of it, another component. All the countries that are going to join the United States and Canada, a third component of growth, and you want to take the leaders. So, now finally I'm going to finish with GameStop again, all right? Once again, I'm going to have to say, I don't believe that you guys are doing this. I mean, GameStop, it traded up to 480 on a short squeeze, and all of a sudden, those rogues or whoever's buying this are doing it again. So please like and subscribe. We have the promo going on. We love you. We love to answer all the questions you have. And this chart of GameStop reminds me of the old adage, fool me once, shame on you. Fool me twice, shame on me. Ah!